Welcome. This is Ryan Andrew with the Andrew Agency Insurance. We're an independent agency located in Richmond, Virginia, serving clients in Virginia, Maryland, and South Carolina. Once a week, we put out a video to answer an insurance question to help you make a more informed decision about your coverage. And this week, I want to talk to you about a very exciting yet unpleasant topic, and that's insuring teenage drivers. There's no question about it. Insuring teenage drivers is very expensive. But there are some things that you can do to make sure that you have the proper coverage and also help manage the increase in cost. There's not a company out there that's going to basically offer you the same coverage you have now for less when adding a youthful driver. But again, there are some things that you can do to help make sure you're protected and to manage that increase in cost. The first thing, you want to make sure that all discounts that you're eligible for or your son or daughter is eligible for is added to the policy. Some of the most common discounts for teenage drivers are good student discounts, 3.0 or B or better grade point average. They don't take into account honor roll or AP classes, so again, it's pretty much straight across the board, 3.0 or B or better. Student away at school with or without a car. Again, this is something that's not as common, but you want to ask because this can make a significant difference. If your son or daughter is still a dependent, still technically within your household, yet they're away at school and their school is more than 100 miles from your home, there's a pretty large discount that could be added to the policy that'll help your cost. The other factor is going to be the type of vehicle your son or daughter either has or has access to. If you have 3 drivers in a household and 3 vehicles, most insurance companies are going to assign a primary driver to each vehicle. If you have 2 vehicles and 3 drivers, one of the 3 drivers can be assigned as an occasional driver. If this situation applies to you, this is going to be the least cost-effective way to basically manage that teenage driver. You can add them on to one of the 2 vehicles as an occasional driver. Obviously, you want to put them on the vehicle that he or she's driving the most, but at the same time, if one vehicle is brand new and the other one's 10 years old, you kind of can decide which one's going to be more expensive, which one's not. The other factor that comes into play, most parents are going to shop their policy when adding a teenage driver, and that's certainly understandable. But when you do that, and you think to yourself, oh, I can reduce my liability coverage, you cannot. Your exposure for having a teenage driver on your policy goes up even more so than the ratio of claims in teenage drivers. If your son or daughter has an accident and the other party is hurt and they sue you, they're not suing your son or daughter. Or I should say they are, but you're going to be paying for it. You're responsible. Instead of reducing coverage, you need to talk to your agent about increasing coverage. And if you don't already have an umbrella policy, get one. Again, very important, especially when teenage drivers are in the household. Again, this is Ryan Andrew with the Andrew Agency. Have a great day.